Hey, Steven.
Hey.
You looking sharp there, buddy.
Look, we're going through historic times. We're living through a trade war. We're living through a historic financial crisis. But most of all, I have been hit with a huge tariff increase in the price of my tank tops, right? I have tank tops coming from China, and as part of supporting these trade tensions and navigating this, like there are no tank tops until these tariffs get rolled back.
Rough, man.
It's tragic. That's absolutely tragic. It's the worst outcome of this trade war so far.
I'm patriotic,
hey, You look sharp, man. You look sharp. Let's hear in the chat. What do you think of the Sun King covering up his skin like this?
Is that an American-made blazer then?
It is American-made. Yeah, this is an American blazer. You know, this is what I've been forced to do as a result of these changing economic times.
Tariffs and trade wars is the talk of the week, obviously. What a week it was. Just last week on this show, we were staring down the barrel of some market chaos, which then did happen. We saw some indexes here really spike up in terms of economic uncertainty. We saw business conditions worsening chart hit an all-time high going back all the way to 1980. The Kalshi recession prediction on the prediction market went from about 40% to 65% in the first couple of days of this week. So lots of chaos and uncertainty. Of course, the markets were down big. Interestingly, Bitcoin was up after the first day of turmoil in like a contrarian to the stock markets, which was very interesting. Of course, Bitcoin eventually did follow down into the low 70s. Stocks are back up. Bitcoin's back up. We're almost at 84K now. Again, what a crazy week. Lots of volatility. And we have tons to talk about. So, Steven, I'll kick it over to you just for your general takeaway, and let's see where this goes.
And we just got over 84K. I didn't even see that. So Bitcoin's strong here, especially if you map it to previous S&P price points, right? So if you look at the last time the S&P was at 5,400, what price was Bitcoin? Looks amazing. And I think there's been numerous moments where Bitcoin has traded quite differently than it would have in previous years under similar market conditions. Anyways, but pause on Bitcoin right now. So this has been, just a roller coaster ride of a week to keep up with. We came into it with the highest tariffs in record from the U.S. on all of its global trading partners, right? There was I think the market was prepared for maybe a 10% universal tariff as a base case. And maybe if it was really bad, that got close to 20. Instead, we got something that was far worse from the market's perspective, from analysts' perspectives, in basically all categories, including like through the roof tariffs on China, which obviously has a unique impact. So markets went into a tailspin. This was last week. The fastest 3-day drawdown of all time, which it's not just about the magnitude, it's about the speed. And then we obviously get kind of a reversal. All of a sudden, I believe it was Monday, but at the beginning of this week, you get a 90-day pause on all the tariffs. You have a 10% up day that then sells off 5% the next day. The S&P has basically been trading like a cryptocurrency. It's been wild to see. In fact, the volatility on the S&P surpassed Bitcoin for a point there. So really a historic week, but stock prices do not tell the whole story here, right? And actually, I think what's very interesting and what, the stock price movement is kind of behind us, even though it's just been a week. That's already in the rear view mirror. It looks like I was kind of vocal and calling for a bottom, on that Sunday night futures candle. So far, I am correct. That was the bottom in equity prices. But that's already in the rear view mirror. What we're dealing with now is a different sort of problem. And this has to do with stress to the financial system itself. The plumbing, bond yields, the spread between swaps and treasuries. And we'll get into this over the course of the conversation. But this is the sort of stuff that the Federal Reserve must respond to when these things start blowing out and coming under pressure. And make no mistake, they're under pressure currently. So we are looking at a situation where the difference between the interest rate on swaps and the interest rate on treasury bills is at a negative spread. This basically should never happen, and it breaks models across the board. It can blow up very large trillion-dollar trades that are arbitraging. This would be called a basis trade. We can get into detail on all of this. But these kind of critical pillars of orderly functioning in financial markets around the globe are inverted. And so the question is, where is the Fed? Are they going to step in? Are they going to step in this weekend? Are they going to, let it keep going? But we're at a thing where we're at a moment in time where these conditions are just worsening. And in fact, my take would be the rally you're seeing in equity prices today is actually investors starting to position that the Fed will be forced to act relatively soon.
We've also got Alec Bakush and Alex Stanzik here with us, two guys from the incredible Swan Private Wealth team, working with Bitcoiners and Bitcoin investors to grow their Bitcoin wealth for generations to come. Guys, thanks for joining us today. I'll hand the floor to either of you wants to take the baton from Stephen.
Yeah, hey, so glad to be back. It's always fun jumping on, hanging out with you guys, and talking through. There's never a dull moment in markets right now, as Stephen just explained. The main conversation I'm having with clients right now is, the only certainty we have right now is to expect uncertainty. There's lots of signals to pay attention to, but in general, things are looking super strong. My bullishness for Bitcoin is heavily retained, and yeah, I'm excited to see how a lot of this stuff comes to play out. I think it's an exciting time to be a part of Bitcoin, to watch these things somewhat from the sideline, being that I'm, just about fully allocated to a neutral reserve asset, being what Bitcoin is. So, I've had my popcorn, and it's been a great show so far.
I want to go back really quickly to something Stephen said about people wondering when and if the Fed is going to act. There's a really interesting thing going on with the reverse repo, where it has gone from, I guess, approximately 2.5 trillion down to possibly even less than 200 billion in a very short span of time. And from my understanding, essentially what this means is that's liquidity being injected into markets somehow, some way, basically greasing the gears of commerce. The question becomes, what happens when that runs out? I mean, is this a thing that's going to force the Fed's hand? What do you guys think?
Yeah, I mean, I think we are coming up on that moment, unless these dynamics. So let me just real quick, let me pull up some numbers so I can speak accurately. So the 10-year yield is currently at basically 4.5%. This is basically retraced to, give me 1 second. Yeah, it is basically unwound all of the decreasing yield from the start of the Trump administration minus a little bit. So if you remember, one of the primary goals of Besen and the Trump administration is saying, hey, we want yields to come down. This is going to make the debt more affordable. This is going to make mortgage rates go down. Those yields are blowing out rapidly. Bonds are being sold massively. The dollar is down quickly. And you're seeing stress emerge in the real plumbing of the market. And so unless this reverses in a hurry, let me put this another way. If this trend continues, if yields keep increasing, if the dollar keeps falling, and if the swap spreads continue to be negative, the Fed will be forced to act. It's like within the next week or two, if this continues. Now, maybe it doesn't continue. But for it to not continue, I think you need to see some sort of fundamental resolution in what is driving fear in markets right now. So this would maybe be a trade deal with China. It would be something that really resolves this whole thing. And I'm just not very optimistic that you get that in the next week or two. So I do think you see Fed action before you see China resolution.
Is it fair to say that basically the Trump administration is currently playing chicken with China, and like whoever blinks determines whether the Fed gets involved here or not?
So yeah, I think it is fair to say, right? Like there's a power competition between these two nations, and unfortunately, like so. I try to be very level-headed about these things. I've made some comments this week on just like the temptation to fall into like reflexive views, either pro or against Trump. I think tensions are very high. It's very easy to have, I think, a view that isn't well informed. So on one hand, I'm very sympathetic to some of the goals of the administration, which is basically managing Triffin's dilemma and trying to restructure the role of the dollar in America in the global monetary order. I'm very sympathetic to that. That being said, I think they went about this poorly. And I think that we came into a confrontation with China without our allies behind us. And I think what's happening now is they're trying to get our allies behind us. That means Japan, that means Europe. If you have the EU and you have Japan and we've got trade deals worked out, we're not tariffing them, and they're going to stand behind us in enforcing US-led tariffs on China, then the US has a pretty strong hand here. We do have a pretty strong hand either way, because the Chinese economy, it's not in a strong spot right now. There are real cracks in the armor. However, they have a central bank that will do whatever is in the interest of the political authority, and they're using that central bank currently to prop up markets. Our central bank has been unwilling to act. So we don't have the Fed in our corner, and we also don't have our allies in our corner. And so while I think America has a stronger hand than China right now, we need to rectify Japan, the EU, and get the Fed on our side, or at least 2 out of 3 of those.
I saw a great chart. I mean, talking about the liquidity stuff with the reverse repo being drained, basically, is a way to inject liquidity into the system on a market demand basis. So the market's saying we need liquidity, and that getting drained is, one way to access it. Obviously, rate cuts, QE, et cetera, can all affect liquidity as well. Right now, we are actually seeing liquidity conditions, liquidity start to increase in the markets again. And for a little grade A hopium here on the Bitcoin price, you can see that the previous setup in terms of liquidity conditions that looked similar to this was 2017, going into 2017, and the massive run up to the end of 2017 there. I've been hearing people say that, for various different reasons, including this one here, that we're looking at maybe a price cycle like 2017. I've also heard, for lots of good reasons as well, that maybe we're out of these halving driven price cycles, right? The amount of Bitcoin that's being, put out into the system now is minuscule in terms of, the amount that already exists. It was a lot back in the first epic and second epic, third epic. Now we're talking about a small percentage of Bitcoin against the existing supply that's already been distributed. So that's one good reason. Another one, we're in a much more advanced sort of market for Bitcoin now. It's a player on the global financial stage, right? Major nation states, the biggest nation states, is talking about buying and accumulating Bitcoin. We know other nation states are mining and accumulating Bitcoin. Obviously, we got ETFs. The big financial companies around the world are embracing Bitcoin to various degrees. So now that makes a different market for Bitcoin, and there's different fundamentals and different pushes and pulls around what's going on, and the halving cycles may not be driving it nearly as much as they used to for all of those reasons. So what do you think, Stephen? Is it possible that we might be seeing some kind of like 2017 like run up because of these liquidity conditions? We get a bunch of cash into the system and it get pumps into Bitcoin, and we see some kind of blow off top? Or are you thinking, like we've talked about quite a bit on the show, like are we entering into more of this like less volatile kind of stair stepping up, lower, smaller lows and smaller highs?
So that's a great question, and I think there's a few important ways to answer it. I'm definitely not ruling out like a relatively explosive move higher. In fact, all of these stresses and all of these tectonic monetary shifts add probability to that. So you could definitely see that. What I'm going to push back on is I'm actually the most against and I'm the most strongly opposing the kind of 4-year cycle thing that I've ever been in my life. And so the idea that we're getting a 2017 cycle, no, I completely reject that. And I completely reject the reasoning behind that. Could we see a move that maybe resembles it? Sure. But is that going to be followed by something like the 2018 bear market? I think almost certainly no. We are in uncharted territories for Bitcoin. And it has shown us this again and again. I had some tweets maybe during this process that if you told me 2 years ago that the S&P would be down close to 15% in 3 days, the most it's ever fallen, and you asked me how much would Bitcoin be down, I would have said 40%. Bitcoin would have been down 40%. Instead, it was down, I think, like the same. It was down like 15% or something. That is already a historic divergence from the world we've been living in. And you've seen this time and time again. We're at 84 right now. Like, this isn't a bad price. This is, if I had told you at the beginning of 2024 that by April 2025, we were at 84K, you would have been thrilled. And because it's a good price, Bitcoin is up. And it has really weathered this whole, I mean, this has been a financial crisis in some ways. This has been a historic crisis. And you have seen stocks, individual stocks, fallen like the most they ever have in the fastest manner they've ever have. I can point to numerous highly profitable, world-leading, high-quality tech companies that are down more than Bitcoin.
Yep.
That's almost never been true. So I think we're in a completely different territory, and I think that continues, and we're all going to find out together, what that really means and looks like.
Yeah, I think that there's been a couple narratives before, probably a few years ago, people saying, Bitcoin has never seen a recession as of yet. And, just having these little signs of, well, it's large market downturn and Bitcoin standing up so well, kind of proves that point that it's going to do pretty dang well, even if we do kind of dip down further or get official recession. It probably still stands up extremely well. And I think that a lot of it comes down to your point that 4-year cycle is probably going to be different here is the market participants are different. We're not seeing a high level of involvement from retail as prior. Most of the Bitcoin market was made up of retail, but we have many institutions coming into play, whether it's corporations or different investment funds, pensions, etc. So there's a lot of different factors to consider, and I 100% agree with you.
100%. It's just a really unique environment to find ourselves in, and it's one. So I'll kind of out myself on something. So one of the things I've always disagreed with the Bitcoin community about pretty heavily, and something I'm starting to change my tune on. So wait till I get to the end of it. You'll be happier with where this ends than where it begins. I have always been very skeptical of this idea that you're just going to run into this moment where like suddenly, all of a sudden, the world kind of reprices in Bitcoin or anything approximating this. Just that like Bitcoin goes 0 to 100 and becomes a critical part of the financial system. I've always been someone that says that I think that's extremely unlikely. It's going to be gradual. It's going to be over a long period of time. And this isn't me saying I'm now saying, oh yeah, like US dollars going to zero, hyper Bitcoinization, anything like that. But what I do believe now is I think the odds are the highest they've ever been that by the end of this year, Bitcoin will play something resembling an important part of global finance. That doesn't mean it's the only thing. That doesn't mean fiat currencies disappear. But on a nation state level, Bitcoin will have something resembling a strategic role. And I think the odds of that actually basically going 0 to 100 this year are the highest they've ever been.
To that point, I saw a conversation within the last couple of days where Senator Lummis is kind of alluding to this idea that regardless of whether the SBR passes into law or not at a congressional level, we did have the executive order that created an SBR, so to speak. It's not formed in law yet, but she was sort of alluding to that we may actually move towards purchasing that $1 million worth of Bitcoin, whether the law passes or not. And that kind of dovetails into this thing I saw from Standard & Poor's, where they're basically saying that if the U.S. starts buying Bitcoin in size, that the rest of the world will follow.
Correct.
I thought that was fascinating.
Correct. Almost certainly. I think that's almost certainly right. That they will follow. They will follow.
They have to. That's the game theory of it. It's great to see it recognized in that kind of a publication.
Yeah.
But yeah, Bitcoiners have been talking about this forever at this point. And on the show here, we've been saying it's going to require the buy. The buy is what's important. The creation of the SBR is one thing. It seemed like the market had that priced in, but the buy is important. And I think there's two levels of the buy. I've said this before, but I'm just going to repeat it real quick. Two levels of the buy. One is the executive branch finds budget neutral ways to buy Bitcoin. That's what's happening right now. Trump tasked his team to find budget neutral ways for the executive branch to kind of move money around so that it can apply it to Bitcoin, but they cannot make a huge move because Congress, controls the budget, right?
Yep.
So there's a little wiggle room for the executive, but the Bitcoin Act, that's where the big money is. And if the United States passes the Bitcoin Act and pledges to accumulate Bitcoin for 20 years or accumulate and hold Bitcoin for 20 plus years, that's it. Like, what do you do? If you're running a nation, any other nation on this planet, the most powerful nation on earth says Bitcoin is a strategic asset and we have a plan to acquire as much as we possibly can, basically. So I don't see how that could not, set off the suddenly phase of Bitcoin adoption.
Correct. And especially when this is kind of all centered in this administration vocally and directly discussing Triffin's dilemma. They are wrangling with Triffin's dilemma here. They are saying there is a cost to the US dollar dominance in the world that is borne by American citizens. And we are now renegotiating that monetary order. So that's the thing I'm very supportive of when I look at what's going on. Now, it's a very different question. Have they gone about that in the right way and the most tactical way and those sorts of things, right? So, that's harder to feel. But they are negotiating this monetary order. And it's hard to imagine a solution which isn't improved by including a neutral reserve asset at some level. This doesn't mean no more dollars. It doesn't even mean that the dollar isn't the dominant currency in the world. But the more you can have a neutral reserve asset to settle certain trade balances, you can get certain benefits from that. And so I think the hope is real. And the path is the clearest it's ever been for Bitcoin to actually play a pivotal role in the global monetary order.
Here's another thought. Is that you can't really tariff a Bitcoin transaction, not unless it's done voluntarily, right? So, how much of a wake up call is it when the current administration comes out with the announcements of tariffs, retracts that, puts it back in a different way, says, okay, the rest of you guys don't have to do this. It's 10%, but China is going to be like massively tariffed. So, this has kind of been a whiplash kind of effect in markets. Can you just imagine what it would be like being a sovereign with all of your largest corporations and all of your largest industries coming to you complaining about what's happening, and then trying to figure out, okay, well, there is this neutral asset that we could use for global trade that will not be tariffed. What about all that?
Correct.
And do you think that will ever be a thing where countries are like trading with each other to avoid?
Well, this is another thing that we saw this week, right, guys? The reports that Russia and China are settling some energy trades using Bitcoin.
Yeah.
I think this kind of like went under the radar this week. But yeah, there are reports that it seems somewhat credible that this is happening. Let's see.
Oh, that's right. That was a Van Eck report.
So yeah,
this week.
Russia's oil trade was valued at 192 billion last year and growing. Yeah, that was in a Van Eck report. So there you go. It is happening. It does make sense that it would happen.
Yeah. So I think there's two things there. There's like using Bitcoin to settle trade, which Van Eck did report on that. And there's also like circumventing tariffs, which was kind of what part of your question made me think about, Alex, was like, and 100%, like that's already a prominent thing. And that's why I said that the US needs to have our allies behind us. If the EU allows China to export goods to the EU, and even more so if they route through there, the tariffs are pointless. The tariffs are effectively pointless. Like the Chinese exports are all stuff, things. Like if you ship them to the EU and then they ship them to the US, that doesn't matter. You know what I mean? It's nothing.
Think about that. Mm-hmm.
We need the EU to stand with the US if we have any hope of putting pressure on China. Different question altogether. Is that the approach we should take? How should we do it? But if that's the approach we're taking, we need them to not just be the release valve for US tariffs. So it's something that like I think one of the most bullish things that we could see come out of all of this is these quick deals with Japan and the EU. We get them in our corner, and then our hand is much stronger. And I think we can really take a crack at trying to, and I'm sympathetic, right? I'm sympathetic to some of the reasons that Trump really has a problem with China. And these are reasons that have been echoed by Democratic politicians, by Chuck Schumer, by many people that are not Donald Trump, has said, hey, yeah, China is a currency manipulator. They do artificially control the UN, and they do use this to certain strategic goals. And Abraham Lincoln was actually not famous, but he is known for having a specific view on free economies and global trade. And what Abraham Lincoln's view is that if you have a free economy and you have an unfree economy, it puts the free economy into jeopardy. What this means is like, if US kind of free market corporations have to compete with like Chinese, some quasi-forced labor, right? Like labor that's being paid pennies, that damages the like functioning of our free market, right? There actually is a way that like, yeah, if your let's do a theoretical example. Like, let's say you have a mining corporation that produces cobalt ore, and then your competitor in another country is using child slave labor to do it, and they're producing it for 1/10 of the price, right? Like you can't survive that. And then all of the cobalt ore mining goes over to like the country with bad labor practices. And Abraham Lincoln was very strong on this as like a real thing, that like he was very pro free markets, open markets, not having trade barriers. But if you're competing against somebody that is imposing some of these practices, you really have no option but to you have to impose certain restrictions. And this is something that Democratic politicians have talked about as well, via currency and trade practices. So I'm sympathetic. I'm sympathetic. These are, again, I think it's a lot easier to agree on the problems that the administration is targeting, but it has unfortunately been a lot harder to agree on the tactics.
Yeah. And it's been really, there's a very strong track record of IP theft happening in China. So businesses, US businesses do business in China, and within weeks you'll see knockoffs, flooding into the Chinese market at 30% off of retail prices of the American company, et cetera. So that's just another example. It's not fair. It's not a fair. It's a fair trade relationship if that's happening, and we got in bed with this, during the kind of the arrangement of the current global trade order. And we opened everything up. We got China into the WTO, and then this is it. Like the deal we made is we're going to offshore a whole bunch of production of the stuff we want and need to Asia and to other parts of the world. And we're going to financialize our economy and distribute dollars to everyone. And our stock market's going to pump. We're all going to get rich. That was basically the idea. And that's what happened. But these are the outcomes. It's not necessarily the best outcome for American businesses, obviously, not all American businesses anyway. A lot of industries have been pretty decimated. And it seems like there's a middle ground somewhere. And, Trump's playing all these cards out right now. He holds a very strong hand. As Steve was saying earlier, China's got some strengths as well, but there's some weaknesses there. And it's honestly somewhat refreshing to see a U.S. leader kind of stand up and say, hey, this relationship isn't quite right. There's some issues here we need to fix. And instead of just kind of being beholden to that trade relationship and dominating everything. Interesting to see it happening. What do you guys think of the move, though? I want to know if you, like Alex, I'll start with you. Do you think Trump intended this to play out the way that it did? Do you think he stood up with his chart with his 42 different tariff rates for 42 different countries, a lot higher than anything that had been discussed or floated in the media, and decided, okay, this is going to cause lots of turmoil, and then a couple of days later I'm going to be like, psych, everything's 10%, we're focused on China? Do you think that was a calculated move, or do you think his hand was forced to kind of make that corrective action by market action?
Yeah, I mean, a couple of thoughts here. Number one, I don't think it was a calculated move. I think this idea that Trump likes to there's an idea out there that Trump likes to use this as a negotiating tactic, where he'll come out with his first position that is like this bizarrely hyperbolic or non, may not be reasonable position, right? And then he backs off of that and they negotiate somewhere in the middle. I think that might be right. If you look at the way he approaches a lot of these kinds of things, his original demands are usually pretty shocking, even to the point where people would be like, oh my gosh, that's kind of ridiculous. Like, what are you doing? Did he predict that it was going to cause this much chaos? I don't think so. I think everybody's been surprised by it, probably even him, if I had to guess. And hopefully the net result is that it turns out good. I mean, here's an interesting thing. This was just brought up by the other managing director of Swan Private, John Haar, that Bloomberg AI was showcasing something Jamie Dimon said. And Jamie Dimon is predicting that there's going to be what he calls a kerfluffle in the U.S. Treasury market. That's going to prompt.
That's the technical term.
That's the technical term that is going to prompt Federal Reserve intervention. And he goes on to state that he's attributing it to the expected turmoil due to all of the rules and regulations, aka tariffs and stuff that Trump is doing. But they will only step in if they start to panic a little bit. So I guess we'll see what that means. Do you guys think that holds any weight?
Yeah. I mean, I think it's right. And I think that's just like, this sort of like these response mechanisms are in response to panic. You know what I mean? Like, that is how this stuff structurally functions, is like they're responding to things breaking and they're responding to fears. And like, we actually just got, let me like pull this up a little bit while I'm talking, but like, we're just getting like some recent reports. This was Charles Gasparino just reported this. I'll share this with you, Brady. I'll read it, but
yep,
look at it. New reports coming out of the White House. Breaking. CEOs are speaking with White House on the trade war. One told me that Trump has an open door policy and is listening to their concerns on the tariff impact on the economy and markets. The overwhelming fear expressed both to Trump and his aides is that the tariff war needs to end ASAP because it will stoke stagflation. It'll cause a 5% yield on the 10-year bond, and this carries a whole set of risks. Also, that Trump needs to quickly pivot to his growth agenda. White House is said to have assured CEOs the pivot is happening and deals are being done. Also, that there's plenty of room to negotiate with China. So a few things here. And one reason, like why I shared that right now, is going off with what Alex said. So I don't think this was the plan. I think Lutnick had a very aggressive policy on tariffs, and Lutnick is better at convincing Trump than Bessent has been. He's a better talker. And so ultimately Trump went with the Lutnick tariff plan. And I think it caused way more pain, way faster than what they were prepared to handle. Yes, Trump has a tendency of opening with a big ask. Yes, that can be strategic. Yes, all of those things. I'm not denying that. I agree that he was always planning to come in higher than where he wanted to be, and he was going to walk it back. But they came in too high, and it caused too much pain too quickly. And that's what I think they weren't prepared for. They were not prepared for minus 15% in the SPY in 3 days and the 10-year ripping and all of these funding stresses, right? So they had to pivot. It was not the plan to pivot. They had to pivot. There was a pivot that was the plan. And this is the nuance that I've tried to discuss this with people online. Yes, they were always going to pivot. Yes, there was a plan to pivot. No, it wasn't this plan. It wasn't on Monday, and it wasn't that quick. And so then the thing I just shared of the trade negotiations and the comments out of the White House, they're pivoting. They're pivoting. Like, we are over our skis. These conditions are not viable, and they need to go hit the growth engine, which is great, which is awesome. And I think that means that, like I said the bottom was in Sunday night during the futures open. It opened down like 5% overnight trading. That was the low. I've been very vocal that I think, people have been very scared. I've been saying the bottom is in. We're not going back there for many reasons. And so if he is really making this pivot, asset prices are going higher in a hurry. Once people realize the all clear, they're way offside. Everyone is so offsides. So these are still great prices from my view.
Yeah, one thing I'll point out, quoting Luke Groman, it was about a week ago. He was on Coin Stories with Natalie Brunell, but he, quoting him, if you don't devalue the debt to GDP first drastically, quickly, because we're on the clock now, you run into a risk of a sudden stop. That seems to be what we're running into. The sudden stop would look like S&P down 20% in a month. Initially, the 10-year treasury yields would go down, which they did for the first little part of that. And everyone believed it was going to work. This was Bessent's plan, right? And then 10-year yields would start going up. And by end of month, they'd be up 10 or 20 basis points. The dollar would probably be down on that, which it is. And gold would be surging. It is. And I think at some point, Bitcoin will stop trading with the NASDAQ and start surging as well. So interested to see if that last part with Bitcoin starting to surge, if we're about to start seeing that. But he also goes on to say, is that when the Fed comes in and prints money? That's, we're kind of waiting on the last part of what he said to play out, but it just looked like a beautiful, perfect call as to exactly what we're seeing. So I found that super interesting and love following Luke Groman for that reason. Seems to be very on top of what's going to play out here.
Yeah. Luke has been quite on point with these recent moves, I love Luke. I've learned a ton from Luke. Very positive view. I think he has the curse of being early. I will say that because he's been talking about some of these dynamics for the last 5 years, right? So he does have a little bit of a timing. There's been a timing challenge of I think he sees the end game, but hasn't always seen what's next. But I would say in these last few months, he has been on the money in terms of what's next, and definitely credit where credit is due. None of that's a criticism of Luke. He plays a challenging game of trying to forecast the restructuring of the global monetary system.
For sure.
Yeah, I just looked at so if you look at the 1 month price performance on Bitcoin, guess, give me a guess. How much since exactly 1 month ago, how much is it up or down? Is it down? Is it up? How much? Give me a quick guess. Anybody?
I think we're up.
Up, yeah. Let's go up.
Yeah, we're up 5% in the last month. Like you wouldn't know that, based on sentiment. You know what I mean? It's like, disaster has struck, but literally like from a month ago, you're up 5%.
I think Bitcoiners have gotten really spoiled. Bitcoin's had incredible performance, really for like the last year plus. And if it moves sideways for any period of time, I think Bitcoiners are a lot of them are feeling very spoiled.
Yeah, absolutely.
Yeah, go look at year to date as well. Bitcoin's performed better than the Nasdaq, about a par with S&P. It's quite bullish.
And that's not even including the like November to January rally, right? Like you're not even getting of course it's done better, but you're chopping that off and it still has. That's crazy. Brady, could you put up that SOFR spread image? I wanted to hit that. Do we have that?
Yeah.
It's in our place. This is one thing I wanted to talk about with everybody that I think can be like technical. And I think there's a simple way to explain it and why this matters so much. So this is maybe like 2 days old, right? I'm not saying this is the current swap spreads, but this is basically what this is. I want to explain what this is, and I want to explain why it matters and why everyone suddenly got so talking about the Fed coming in. So this is the spread. So spread is like the difference between two rates, between a swap and a treasury bond. So like if we look at like the 2-year, right, that's that first dot. That is the difference in interest rate between the 2-year swap and the 2-year treasury bond. And so then the 4-year, that's the difference for the 4-year, the 30-year, the 25-year, the 10-year, right? So these are negative. A negative spread means that the swap is trading lower than the treasury bond. And so that's basically incredibly abnormal. A swap should never be lower than the bond. The bond is effectively safe, pristine U.S. government collateral, right? So you would always be paying it. There's more risk, right? Like there's more risk. A swap is a private instrument. It's like a private credit swap. So you're trusting a bank, you have a counterparty. It's not the government that's your counterparty. And so all of these models and all of these strategies that everyone runs mathematically rely on positive rates, positive spreads between swaps and bonds. The only time that this ever goes negative is under like extreme conditions where there's like a huge demand for swaps or there's a ton of selling in treasury bonds. And so this is worth understanding because we are looking at like extreme radical dislocations in these markets. And this effectively signals massive fear in the quality, trustworthiness, and stability of the US government collateral. And that's why this is so threatening. And that's why this is something that I think really has been this picture, I believe, is from the night before the pivot. So this is like right after Trump stopped the tariffs. And people attribute this dynamic to that. It has persisted. It got better and then it worsened again. But they need to get this under control. This is what people have been talking about, the basis trade blowing out. There's trillions of dollars levered up in a positive relationship between a swap and a treasury bill. And these should effectively be very consistent relationships. And we're like deeply negative across the board. This is like a deep negative. So I just thought this is worth understanding a little bit. And this is really what's going on. This is really what is bringing the change of tone.
So how does that change? How do we move those back into more healthy territory? What needs to happen? What actions might be taken from the Fed, from Trump, etc.?
Investors need to feel confident in the US again. They need to feel that conditions are stable, conditions are trustworthy. We may need liquidity support from the Fed to just actually bring in to lower treasury yields, right? To bring these yields down, right? So when people are selling these bonds, those yields are going up, right, on treasury bonds. And so there's been all this selling. And so it has caused those yields to go too high. And
Yep.
you know, we may need liquidity control. We may need yield curve control. We may need the Fed to step in, and we need confidence most of all. And so maybe one way you get that confidence is the central bank backstop, and maybe another way you get that confidence is policy changing.
Yep.
Another part of that is China as well, right? They're a massive buyer of our treasuries, and I would assume they're one of the large players selling off.
Many people have suggested this. Certainly possible. They have a lot of treasuries. Hard to know, but many people have said this theory.
There is also another thing that may have flown under the radar just a little bit is that Trump filed an emergency request with the Supreme Court asking them to allow him to remove top officials at independent agencies in the government. In particular, they're asking about the National Labor Relations Board and Merit Systems Protection Board. But the broader implication is this could affect the executive's control, the president's control over another independent agency called the Federal Reserve. And so it's fueled some speculation that Trump might move to supplant Powell by expanding on this kind of a court request, basically. Any thoughts on that idea, guys? It's like I said, it's kind of flown under the radar, but it's interesting. I saw some speculation that that this move is a precursor to Trump trying to implant or put Bessent in charge of both the Fed and the Treasury, which would be unprecedented.
Yeah, that would be shocking, right? It would be literally shocking because the way the Fed is operated, it's essentially been governed the same way, from what I understand, since the beginning, back in 1913, when they first created the Federal Reserve, right? So it's, I think, 100 plus years of tradition that would be upset if that actually happened. I personally, I would be shocked if the Supreme Court allowed something like that to occur. The other thing that I wonder about is that if the nature of the way the Fed has been governed for the last 100 plus years hasn't really changed, they must have structured that in a way, and I'm not saying I'm an expert, but they must have structured it in a way where it would make something like that very difficult to do. So fascinating thought. I guess we'll see.
Yeah, I'm with you. I'm very skeptical of that happening. And even the story is being reported in kind of a misleading way. The only thing Trump actually asked for the authority to do is to fire the heads of two independent agencies, neither of which was the Fed, right? And so there people are saying, oh, he wants the authority to fire. I don't even know who it was. Like, imagine it's like the EPA or it's, you know, whatever. It's like some agency. He wants to fire like the EPA guy or whoever. And so, yeah, you could maybe take that ruling and then try to extend it to say that he can fire Jerome Powell. But like, he didn't ask to be able to fire Jerome Powell. Like, you have to take certain leaps there. And yeah, I'd put the odds super low that the Supreme Court's going to be like, yeah, you can fire the Fed chair.
Well, it's one of those things where it's like he's basically asking for if I understand correctly, he's basically asking permission to fire heads of agencies that aren't actually government agencies.
The independent agencies, that the president doesn't have authority over in terms of appointing the heads. So the National Labor Relations Board and the Merit Systems Protection Board. So just based on the names of those agencies, I'm guessing this is something to do with DEI.
So this is a fascinating thing, though, because if you think about this, it brings up the nature of the Federal Reserve itself, where, you know, the words federal would indicate it's a federal government institution, but it's actually not, right? And that's something that's fascinating to study. I think a lot of Bitcoiners have probably looked into that, but the Overton window is moving in all this stuff. I don't know if you guys see, but pretty regularly, you're starting to see government officials basically get out there and educate Congress on some of this stuff, or educate the public on some of this stuff. They're talking about monetary things that have been, you know, essentially put to bed for over 100 years. but they're bringing it up again, and they're questioning the validity of some of these things.
Correct. Yeah, I want to just double click on. Yeah, so 2 board members, National Labor's Relation Board, Kathy Harris, Merit Systems Protection Board. So these are like minor independent agencies.
Yep.
And I think, yeah, Brady, you're right. This sounds like DEI stuff. This sounds like those sort of things. And yeah, go ahead.
I was just going to say, I think when Trump was first being inaugurated, a lot of reporters asked Powell this directly, right? And he seemed pretty not happy with being asked that question, if he would step down or if Trump could remove him. And he was just like, no.
Yeah,
that's not legal. So yeah, I would bet with the no there.
Totally. And the interesting question here is like, so this is the funny thing on this independent agencies. Like, technically speaking, the agencies exist under the executive branch. Like, when you look at all these like departments, Department of Education, Department of Energy, like those aren't under Congress. Like, they're not under the judiciary, and they're not under the legislative. So they are under the executive branch. And so there's this thing here where I think what Trump's getting at is like, hey, these exist in the executive branch. Like, I should be able to fire these people. And you know, I'm not a constitutional scholar, but like that's the question that's being asked. The Federal Reserve does not exist under the executive branch. And so that's why it's such a leap to go from one to the other.
All right, guys, we got to wrap it up for this week. Another great episode. Appreciate you being here, especially Alec and Alex for joining us. And if you don't know about Alec on Twitter yet, you should follow his account at Alec_Bitcoin. He's been dropping some really fire threads lately, including this one with a little schadenfreude on the Ethereum price action over the past couple of years. And it's good stuff. Check out Alec on Twitter. Check out Swan Private at swan.com/private. Steven heads up Swan Private, as you all know. Alec and Alex both work on the same team with Steven. These guys are doing great work helping shepherd high net worth individuals, businesses, families on that road to generational wealth with Bitcoin. We build those strong relationships with our clients, and we really value our relationship with them. So check that out at swan.com/private. Also, thank you to Mara, the amazing miner who is contributing to the security of the most secure network, computer network on the planet, the Bitcoin network, and also to supporting the show. Thanks, Mara. Appreciate you all. We'll see you next week, same time, same channel, 11 a.m. PT, 2 p.m. ET. And we'll discuss everything that's happened in Bitcoin next week. I don't know. Can we top it this week, guys? Can we even top this week? I feel like we keep topping, these crazy weeks, week after week. But here we are. I can't imagine the end of year show at the end of 2025, looking back on now. And maybe this is just the beginning, guys. This is just the beginning of the insanity.
Bitcoin has hit 500K.